Ladies and gentlemen, welcome. Today is the 17th of March 2021. It's 8 minutes past 4 o'clock local time. We have the Federal Reserve news at 7 local time. So in about 3 hours. And I thought it's a good idea to give you a bit of a market overview on the longer time frames, on the 4-hour charts of some main markets, and what I think will happen. So first of all, when you look at this chart, this is euro dollar trading at 1.19075. You should realize the price is pretty much exactly in the middle of the overall 4-hour range, okay, of this blue channel. So we are really in the middle of the range, even on a higher time frame. The next thing you will observe is that we have a bit of longies, a bit of shorties, so mixed dumb money positions. The next thing you realize is we do not have a dumb money squeeze going on. Then also there are no big stops nearby. This of course is empty stop here, and it probably will be taken, but I expect some house cleaning. So that means in a nutshell, low tradability, and the smart money together with the news and speeches, etc., to take out short-term stops on both sides. That's what I expect. There is some probability they're going to take this lower stop here before or during the news, but there's not much tradability. So in a situation like that, for example, you don't want to place a trade and then have the news risk, and this is a high impact item. So yeah, at the end of the day there will be some up-down move and then some leveling out. Pretty boring, I know, I'm sorry, but that's what the market does. Let me also show you other markets. So here we have cable, pound dollar. As you can see, we have a bit of longies, so it's coming down, taking out the short-term stops, but the same thing. Pretty neutral there. Can go either way, literally. Can either go up or down. So there's a lot of randomness. We don't like randomness if we want to trade. Let's look at euro pound. Your pound looks a bit bearish with the longies there, and a bit of an ongoing squeeze, and the stops below. So bit bearish, so I wouldn't be surprised. But look, what is a minus on this chart is this here. You see, we already this candle has taken all those lows. This is cleaned up the fake support. So not great. Also considering that both input pairs, as I've shown you just now, euro, dollar, and cable, are neutral. So not great. Let's also look at the other big ones. Let's look at dollar yen. It's just taking the upper empty stops as we speak, 109.222. So clearing that out. I would think it does something like a clean of the high and then some normalization down, but as you can see, so we don't have a strong flow, we don't have nice stops, and we have this old squeeze which can either collapse or continue depending on what happens, whether shorties come in, whether shorties leave the market, etc. So to make a long story short, pretty low bias situation, low tradability, and it requires from our side some patience to wait for more causality bias. This is not surprising because we are right now in a situation where we had loads of squeezes across the markets. As you can see here, this one in dollar yen, the pronounced up move, squeezing out all the dumb money shorties, yeah, as I've shown before. So they've completely killed those traders. They've done loads of stop runs. So basically a lot of dumb money has lost in the last week, so which is why now the market is a bit emptier, and there's a high dumb money tolerance. The price can literally go anywhere the smart money likes, and that's not good for us as traders. Okay, so what I will do basically, I will wait and observe what happens, whether the market wakes up a bit or not, whether some dumb money places itself or not. But I expect literally some kind of house cleaning move in both directions, taking out short-term stops with some comments, then some leveling out. Yeah, something like that. If, of course, there's a big news coming from the Federal Reserve here regarding interest rates, it's not impossible that there is a sustained move up or down, depending on, you know, what they want to do. And this would affect all the dollar pairs, including euro dollar, of course. As you can see, we have those long-term stops down here, just below the long-term low from March. But, you know, also here, 1, 2, 3, we have 3 highs, which represent short-term targets as well. Yeah, so if the Reserve says, oh, you know, we will finally increase interest rates and therefore the dollar will get stronger and therefore, you know, euro dollar will go down, this would be basically an event where they would price in the macroeconomic plausibility as they should, according to the book, let's say, because there's not, you know, it's not that there are massive shortages in the way which would prevent such a move, you understand? Okay, so we'll keep this one short because, to be honest with you, markets are low bias and a bit boring because in those kind of phases, which are not very frequent, but we're not keen on placing, you know, trades in the major markets. There's nothing we can shoot at, you know, there's no squeeze, there's no stop hunt, there's no position hunt, there's no nice pattern, there's no pronounced economic plausibility and so on. So that means not much trading activity today unless things change, and they can always change. Remember, that's a good part about this game as well. Things can always change from one minute to the next. Anyways, so in a nutshell, that's my take on the market right now. Stay safe, everyone. Get some popcorn, just observe what the smart money will do.